Well, welcome to another Workshop Wednesdays. Whoops, where it's just moved on me. That's casual conversations for serious workflows. Brought to you by schoolofbookkeeping.com, where you can be the best bookkeeper you can be. Hey, look at that! I've got two taglines in there for 2 for 1. Right? How are you, Rachel?
I'm great. How are you?
Very good, very good. We're just screaming coming in on 2 wheels, making sure we could hear each other right before we go live, but everything seems to be working out okay. If you're catching us on Facebook, the streaming platform that we are using, we can't see who you are unless you activate a little thing on Facebook, because some of the groups we put it into, like the CBG group or the ABO Facebook group, their settings are private, so we can't necessarily see unless you acknowledge. And so that's that link that I just posted in there about being able to see that on allowing the streaming platform to see who you are, so we can see you in the chat. Right.
Yeah, and
So
Susan's here. Hi, Susan.
yeah, Susan has avoided the what was the name of the storm that came through there? Aida or something. So she weathered the storm, and she's back again. So that's awesome.
We have a
Thanks for joining.
horrible storm here in Michigan right now. It's terrible.
Oh, well, good thing you are hunkered down for for this Workshop Wednesday. We are coming in for a landing here on the e-commerce fundamentals, a discussion that we've been having with Rachel, while Carrie is apparently on sabbatical for the for the workshop.
Apparently.
She does exist. I believe me. She is there, but she did a lot of summer traveling, and so it was great to have you through this as almost like a substitute for Carrie, but there is no substitute for Carrie. But we are finishing up our e-commerce fundamentals, and we've had Rachel Dauchi joining us because she specializes in that industry, and we're kind of putting it all together today with e-commerce accounting, right? Where this is really where accountants and bookkeepers, want to, putting all those pieces together makes it for a smooth process, right? I mean, that's kind of like where you specialize in, right, Rachel?
Mm-hmm. Yeah, and I also have, I don't know if I mentioned, I'm sure I mentioned this before, but I also have an e-commerce store.
Ah,
And that is one of the reasons I was running a little late, is because we're trying to get on TikTok for business. And let me tell you, it is so many little things are so frustrating. And I don't even know. So if anybody has any suggestions on how to get approved for TikTok for business, please let me know.
yeah, that I don't know. I'm kind of like I'm torn on that one, because there's always those uh, like what we were talking before about marketplaces. Um, I think TikTok has some of those rules and regulations that they have to be in their exclusive club when it comes to being able to sell on TikTok. Is that what you're
Well,
running up against?
no, because Shopify pushes to the TikTok channel. So
Ah,
you can list your items on TikTok for business. You can even do little videos on Vimeo or however you pronounce that. And it
the
pushes
mayo.
and it pulls in your Shopify catalog, and that, which we just discovered earlier today, where like
Yeah.
I was explaining to my assistant to save the image and then upload it back, and nope, pulls it right in. It's incredible. And then you can push your Vimeo little videos you make straight to TikTok, but we can't figure it out. But if you have your product catalog connected to Facebook, selling, your Facebook shop, your Instagram shop, and your TikTok shop, they can click and shop and buy right at that moment. And that's what you want.
Ah, Yes, because you got to get that impulse buy. Because if you have to leave an app, like if you're in TikTok,
Yeah, and
mindfully or mindlessly scrolling, I'm not sure which. But if you're scrolling, you don't want to leave TikTok or the app that you're in order
right, you
to
want to buy
complete your
right in
purchase.
there. Yeah, and the
Yeah.
reason that I know that is because I always buy like that.
Right.
Guilty.
You you are your best and worst customer.
I'm like, oh, I
So
have to have those pair of ultra comfy shoes. Bye.
yeah, I mean, when somebody says check link in bio, that's like forget it, right? I mean, that's like watching a buffered YouTube video on an airplane, right?
Yeah,
Like
that's too many steps. I'm like, I'm not going to go back to 2011. No, you have to have the shop now, click on the thing so it takes you right to their store.
right, right.
Or you can even
So
buy it in Facebook, but then those sales actually do get, now that to segue into the accounting, those sales actually do get in Shopify, for instance. If somebody is buying on the Facebook channel or the Instagram channel, those sales are included in your Shopify reporting totals.
so let's set the stage here for the accounting aspect of and I love the name of your business, Net Deposited, because that really at its base as a fundamental concept is really where businesses tend to get lost in the accounting aspect of selling stuff online, right? So talk a little bit about Net Deposited and what that meant, and the mission or of your business, and what you're trying to solve for e-commerce sellers.
Sure. So there's two parts of it really. And first, the part of it is understanding the accounting, and then the other part of it is understanding the accounting software. And in my case, I exclusively use QuickBooks Online. And the reason that I do is because I really love app integration and all the various things that I can connect with QuickBooks Online. But when I first started using QuickBooks Online, it took me a while before I completely understood how everything worked, even though I've used all kinds of different accounting softwares in the past. But QuickBooks Online is a lot different. And so one of my very first clients, started getting payouts through the bank feed, and I was just reporting those directly to sales. And then I realized, wait, I'm doing this all wrong. And I really reverse engineered and kind of figured out the proper way to do the accounting. And man, there's nothing like making mistakes to figure out the right way to do it. I mean, that's why, when somebody explains to me that they made a huge mistake, I totally get it. I have too. And that's the best way to learn. So it turns out that what's coming through the bank feed is essentially your payout. It's your net deposit of what you're getting from your day of sales or period of sales, whichever the platform that's paying you out. If it's either paying for a day's worth of sales with Shopify payments, there's usually a 2-day lag, and it's paying you out for 1 day's worth of sales. If it's Amazon, which we've talked about before, there's usually a 2-week period that they're collecting all of the information, and then they'll pay you out your totals 2 weeks later, and so on and so on. So some are, Stripe and Square, and all of them have payouts. And so, and it's our job as accountants to reconcile those payouts with what they're saying they're paying you out. Because what they're paying out is one thing, what they're saying they're paying you out is another thing. So you have your net payout that's being reported on, Stripe or whatever it is. And then there's the corresponding gross sale that's responsible for that day. So it really depends on how you're posting those sales to QuickBooks. Whether there's a couple different ways. I don't know if you want to get into that right now, but I'm happy to talk about that. But a couple different ways that you're posting your gross sales, but really that's what you need to do is you need to post those sales first on an accrual basis. And then that payout is going to come through the bank feed a couple days later. So that's really, there's a lot of different moving parts to that, but that's the concept of what you want.
Right. So the general concept is that you want to, when the sale happens, you want to account for the sale, and then when the payout happens, you want to account for the payout, but reconciling the discrepancy between the gross sale and the fees and things that may have been taken out along the way, to basically reconcile those sales to the
Yes.
payment. Right. So, and I wanted to, revisit a term that you used accrual-based accounting, which got me stuck when I first heard it, and I want to make sure that we just kind of unpack that. And that's what we're referring to when we're talking about accrual-based accounting with regards to e-commerce, because when I think of accrual-based, I'm thinking of an invoice and a payment later, right? Whereas in an e-commerce situation, the payment's already happened, right? But the payout has not, right? And is that where you're kind of talking about accrual-based accounting in that regard, where it's the sale versus the payment versus the an invoice and a payment later from a customer?
Yeah, but what you just said, and maybe you misspoke, but what you said was the payment first and then the payout later. But I like to, and what you are saying is right. The customer made the payment and then
Yeah.
you get the payout. But I like to think of it as, to avoid all confusion, is the sale was made, you get the payout later. So it's really like accounting 101 is you are recognizing whatever transaction in the period that it was earned or it was expensed is really the right way to think about accrual accounting. So I earned that sale on that day. My customer went onto my website and paid for and ordered that widget on that day. I'm not going to see that cash till 3 days later, but that needs to be recorded on that day. So like you said, it's similar to an invoice, although in e-commerce we don't use that, but I invoiced, if I'm a landscaper, I invoiced my customer on April 5th. That is the date of the sale. He may not pay me until May 5th. And so the opposite would be is if you're doing cash basis accounting, you would recognize the sale of that when it was paid, not when it was earned.
Right.
So accrual is really making sure that you're recognizing it in the accounting period, which is the month that it was earned.
Yeah, I guess the challenge that I originally had about hearing accrual-based accounting is I was thinking of the QuickBooks method, the what it means to QuickBooks when you talk about cash versus accrual, right? So
Yeah.
as these particular transactions are coming in, it doesn't matter if you put it on a cash basis or accrual basis, because they'll come in as sales receipts for the most part, or journal entries, and that is recognized on a cash versus accrual basis, right? So you could say this is accrual based accounting for the sale coming in and then the payout coming in, but from a QuickBooks perspective, it doesn't matter if you run your reports on a cash versus accrual, because they're going to say the same data regardless, right? So there's no difference when it comes to I run this profit and loss on an accrual basis versus a cash basis. It's not going to change the data in any way, because you're really concerned about it from an e-commerce perspective, is that sale that has come in and that payout has come in, and that's what I'm reconciling, which doesn't have any impact on the reporting aspect of it.
Well, I'm thinking in terms of a connector that you're using. So let's say, for instance, you're using a connector that's recording your sales receipts. So it's posting sales receipts, and then it'll also post if it's Stripe or something, and maybe you're using Cinder, it's also going to post your expected payout on the debit side of the clearing account. So yes, it is posting the cash that you're receiving, and then what's going to come through the bank feed is going to match with that. I don't, I, yeah, that might be a little, I might be a little
I mean,
confused.
that's a little bit more than a fundamental topic, I think, and since we're talking
Yeah,
about
yeah.
e-commerce fundamentals, but I just wanted to kind of set that distinction that when we talk about accrual-based accounting, when it comes to e-commerce accounting, we're talking about accounting for the sales and reconciling that to the payout, which is not the QuickBooks terminology of the reporting basis
Right.
that you're running.
You are a QuickBooks expert and pro, and I might not be understanding exactly what you're saying about the running the report
I think I smell smoke.
Yeah, well, well, it really, I mean, what the report is going to say, if you run it on a cash basis, is going to be what your connector has posted as that payout. Maybe I'm just thinking it in terms of that. If you're talking of, if you're talking about, you're sending invoices and clients not paying till later, then that's going to be a totally different report.
Right.
I guess what you're saying in terms of e-commerce is there's not much difference on that accrual versus cash reporting. I guess on an e-commerce.
And it all depends on how that data is getting into QuickBooks as to
that's really what I'm trying to say. Yeah, it really depends on how the data is getting into QuickBooks, because I'm running into this so much is that it really depends on the connector, because sometimes the connector isn't posting your expected payout. It's only posting the sale. And it really depends on the connector's ability to grab that payout data. And so, and this is all about automation. I'm not talking about me running a report and posting a journal entry. I'm talking about connection settings. And some of them you have to not match, but add your payouts into a clearing account. Some of them, like if it's Stripe, it's match, match, match. Some of them, you just have to deposit right into that clearing account. So it's really, really specific on what connector is doing what, and then what the payment method is, because it's all going to be a different type of add or match.
Yeah, so we'll put a pin on that term that you called clearing account. We'll talk a little bit more about that, because that is ultimately what a mechanism that accounting professionals will utilize to help reconcile that sale to the payout, right? But there's going to be some variances from sales channel to sales channel, right? We've talked about the e-commerce or the online shopping cart experience versus the marketplace. There could be a various difference between the timing of those deposits. It may happen, pretty regularly. It may be on demand, or it may be, as we talked about Amazon, could be every 14 days, right, before you actually get that. And then a lot of stuff has happened between those 14 days, and a lot of fees, as if you ever had an Amazon seller, a lot of fees will come out between the time that there was some sales, there's some returns, and there's some fulfilled by or shipping, sales tax type of thing that came into that settlement report that you are accounting for, right? And as someone who specializes in e-commerce clients, the mechanism that you're doing that is a clearing account, right? So talk a little bit about that clearing account aspect and how you utilize that.
Sure. So I'll give an example of one that I actually have to manually post. So my firm, Net Deposited, I sell swag, and actually I sell swag featuring the leading ladies Machine Works, which is Kelly G and Kristen Saraldo, and they sell some of their swag on my store, and I've got some other swag. It's really fun. And so I sell it on Shopify, and every time that there's a sale that comes through, I must have set my connector up wrong because I got a payout with it didn't match to anything. And I was like, weird. What happened to my actual sales posting? Well, for some reason it didn't come in. So I have to manually do that. So now what I can do is I can actually create a sales receipt, and then I can have the payment account be Shopify Payments Clearing. So that means it's similar to undeposited funds. So really what I like to boil it down to is I call it not necessarily a clearing account, but my payments to be expected account. Not sales to be expected, but payment to be expected. So for example, if I've got a whole bunch of sales in my store, and I'm not using a connector or something like that, but I want to put them all in one sales receipt, then I can post that sales receipt, and then in the payment account, I'll just say Shopify Payments, but I'm going to call it Shopify Payments Clearing. Okay. So what that has done is it's recorded a credit to sale and debit to the clearing account, right? So then when that actual payment comes through, I want to deposit that payment to the clearing account. I want to deposit to the other side of the clearing account. Dan, what would happen if I just deposited that payout right to sale?
If you deposited the payment right to sale, now you've double stated your income because the sale came in. It's posting to sales revenue. The payout comes in, and then it's posting to revenue. So now you've double stated your income, and now you're paying more taxes.
So you've duplicated your income. You've duplicated your income, and then you're not clearing out what?
You're not clearing out the discrepancy of that clearing account.
Yeah, you're not clearing
any of those fees.
Yeah, so that's really, really important. So that's what we mean by all these sales need to post, whether I'm posting a sales receipt, whether or not I'm posting a daily journal entry full of daily sales, whether or not the connector is posting a journal entry or the connector is posting a sales receipt with the offset to Stripe Clearing or something like that. So you always want that sales revenue posting. No, I don't ever post a sales receipt directly to the bank account. I mean, I guess you could, and then it can match, but I usually just do a clearing account. But
the challenge with that question there, the comment, if you post your sales receipt directly to the bank account, it's rare. I mean, unless you're doing if this is a one-to-one relationship, then that's fine, right? Like I sold one thing for $100. My payout is 97 something because of the fees that were taken out for Shopify. Wait for that to handle, but that never happens with
because you're getting a batch payout. Yeah,
right? So you're going to be having 2, 3, 4, maybe hundreds of sales in that day, which will then compile into your payout account, and then Shopify at its discretion will, whatever its batch closeout is, will then say, okay, here's all the payments that are expected. Let's put them in their account, shall we?
Yeah, so that's how I do it. Let's say I'm doing a cleanup, and I do this all the time. I'm doing a cleanup, and I'm going into my client's Stripe, and I see sales receipt, sales receipt, sales receipt. They didn't put it in. And I'm like, okay, I've got to add these 3 sales receipts. If it's a ton, I bring them in like with Sasan or something. But if it's like 2 or 3, I'll go in, I'll look at the sales receipts. I'll be like, okay, these are the line items. Here's the amount for the fee. So I am capturing the fee in the sales receipt, and then offset Stripe Clearing. That way, when I've got 3 transactions that add up to $1,000 in Stripe Clearing. Then when the actual payouts come through, I add those to the other side of Stripe Clearing, because what has been posted in Stripe Clearing is my it's my sales receipt, but it's got it totals to my net payout, right? Because let's say I've got $500 worth of sales, and then I've got a Stripe fee for $27 that I've added in that makes it a negative $27. So then my net amount is blah, blah, blah. And then that's what comes in through the bank feed. So yeah, the person who said then you're missing the fees, but if you put it in the sales receipt, that works, but you still don't want to do pay to cash, because like Dan said, it's very rarely that you're going to get a payout for one sales receipt. You're going to get a batched payout for a whole bunch of stuff. So that's why it's really important to use that clearing account. So now if you're using something like Cinder with Stripe for sales receipts, then you can do Cinder will post sales receipt, sales receipt, sales receipt, and it'll post expected payment, expected payment, expected payment. But those expected payments are batched up, but Stripe is telling Cinder what that batched amount will be. So it'll go post, 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 and then what's coming through the bank feed will match with that. But it's not going to be the exact amount of the sales receipt, if that makes any sense at all. So,
so yeah, basically what you're doing, I mean, what
you complicated, but like the other
system that you've, well, let me just talk about the system that you've created is the system that you've created for this is kind of like what QuickBooks Payments is doing automatically, right? When you send your invoices to your customers, and you have like 5 or 6, 7 payments in a day or in a batch, and then QuickBooks then handles the rest, right? It will make the payments for you when they happen, and then it will group the payments together as a funded when it's all funded, and then it will account for the fees automatically, right? So that's kind of like the magic of the QuickBooks payment.
Yeah, then you'll get an email that says, we are depositing $3,050 into your account. And then you're like, oh, okay, because I had like 4 invoices that I sent out that total that, right? So yeah, it's batching it. But the other example I wanted to give was a journal entry, right? So let's say you're because that's when a clearing account is really important.
So somebody did comment a journal entry bad.
Well, that really depends on what you're using QuickBooks for. So for the e-commerce people, we're really not using QuickBooks for reporting. We're using it for the standard P&L and balance sheet, of course, but we're usually pulling sales reports on the platform. So in that case, it's okay that we're using journal entries to record a day's worth of sales, because if you have a high volume seller that's got hundreds and hundreds of individual sales per day, you don't really want all those sales receipts in QuickBooks. And so you want to capture a journal entry for the day. So let's say it's posting, like let's say we're using Bookkeep, and Bookkeep is posting a sales journal entry for the day. So on the credit side, we have gross sales. And then on the debit side, we have less discounts, less returns. That's contra revenue, right? On the debit side. Then we have sales, tax collected credit, because that's the natural balance. And then shipping income, if there's usually a shipping income, is separated out. And then in Shopify, at least there is. And then on the debit side, we have payments to be expected. So that would be maybe you've got a lump for PayPal payments to be expected that's going to go on PayPal payments clearing. Let's say you've got a Shopify payments expected that's going to lump all that there. Then they're going to post the payment journal entry, and the payment journal entry clears out the clearing, because remember that sales journal entry had a debit side to clearing. So the payment journal entry is going to have a credit side to the clearing account, because it's going to clear out the clearing, and then it's going to debit what, Dan?
I'm muted. I was trying to follow your chart. And I was actually
Yeah.
trying to
So
look up Ledger Artist had actually said, I would love a visual for this, and this is what you're describing. And I wanted
yeah.
to
So
post.
I
I
am
wanted to
a
post
T. I am a
a
T
T.
account girl. I love describing it in T account. So I am happy to do that, like maybe at some point. But anyway, there's always two sides to everything. And I am the kind of person I always go into the transaction journal because I want to see how it looks like in accounting. And so when you're using a connector like Bookkeep and it's Shopify, okay, you are going to always want a sales journal entry and a payment journal entry because you want to clear out the clearing. So your payment journal entry is going to credit the clearing, clear out that clearing, just like undeposited funds. Because what dollar balance do I want for that clearing?
We want the yeah, again, I'm lost in your example, but I mean, we want the balance to be zero, right? I mean, because
Zero, exactly. We want that balance to
that
be
will
zero.
reconcile the two together.
Yeah, so we want zero. So then the credit side of the posting journal is going to be the credit side, and then the debit side is going to be to cash because they're receiving that cash. So you post that payment journal entry, and then what do you get in the bank feed? Match, 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 all the way down because it's matching your expected payouts. So that's why I like to call it payments to be expected. So if let's say I'm not using a connector, so yeah, so I use Bookkeep a lot because I love those journal entries with the daily sale. I've got my revenue posting, which they call it your e-commerce posting for the day, and then the payment journal entry. Now you have to understand how to map all that, but if you do, then you get that match. And all of this is to set up for that match. And you want that clearing account always clearing out because then at the end of the month, it's a snap to reconcile. So if it's not, then you're posting that other side to something wrong. So that's how you know if your clearing account isn't clearing out, you're doing something wrong. So now if I didn't have a connector like Bookkeep posting something, I could pull the report and I could post my own journal entry, gross sales, sales tax payable, and so on and so on with the debit side to payments to be expected. And then I could just wait for it to come through the bank feed and, it may match that way. Or if it doesn't, I could just add it to the clearing account. So
Yeah.
There's a big difference between matching and adding. And I'm telling you, like, it took me a really, really, really long time to get this all straight. Because even if you understand debits and credits, and when you increase cash, it's a debit. When you increase revenue, did I just say that wrong? Increase to cash is a debit. Increase to revenue is a credit. So, I mean, if you know all those, that's fine. Still maneuvering it all in QuickBooks and how that's coming through the payouts is still takes a while. It can be really, really funky. But somebody had posted, they saw something about how they do this at the Bookkeep webinar. These connectors are so amazing. They have so many resources. Cinder has lots of articles on why you should use a clearing account. I've sent that article to a few different people. Bookkeep in their resource center has a whole bunch of information on clearing accounts, why they're important, why you need it for accrual-based accounting. There's all kinds of different ways you can kind of refine your understanding on that.
Yeah, and this will all boil down to, like, if you go back and you watch the other topics that we discussed about the e-commerce fundamentals, right? A lot of these things come into play as to how I'm doing all this in QuickBooks, right? So the aspect of sales tax, right? So where are you tracking your sales tax? Are you doing all that in QuickBooks, or are you doing all that in someplace else, right? So if you're handling it outside of QuickBooks, the person that we have a comment here of can't upload invoices as CSV files with the sales tax module turned on. To work around for that, right? So
Yeah.
that obviously that tells me you're doing sales tax with sales tax turned on, and then there's a sales tax consideration, right? So that's a bigger issue than just bringing in the sales tax collected from the sales channel or not, right? If you're using a
Yeah.
marketplace, we talked about those types of things. So the other considerations of is this am I tracking my inventory levels inside of QuickBooks? But all that boils down to is whether or not I want to bring in my sales in a detailed fashion, or do I need to bring in my sales in a summary, right? So as somebody had said, a journal entry is bad. A journal entry is not necessarily bad or good in this particular case, because that certainly could be the transaction to use. But if you are using inventory and if you are using sales tax, then it would be bad, right?
Right, because if you're
not using a sales transaction, so that now that sales transaction, because it's a journal entry, doesn't flow into the sales tax reports.
right. So I'm so glad you said that, because that's another reason to determine, well, can I use a journal entry to bring in all my daily sales? If I'm tracking inventory in QuickBooks, you cannot. It's
Right.
sales transaction only. So you can hit the product service item and you can hit the sales tax. So in that situation, so she can't upload the invoices as a CSV file. I would still, if it's e-commerce, I would upload them as sales receipts. But I would also probably turn off the sales tax module and then just create another, because the sales tax module is meant to use the rates in the system, right? But you can create another sales tax liability account if the sales tax is already being calculated in some platform and it's just being imported to hit the right GL account. You can turn it off. Oh, can you not use it wait, you couldn't turn it off after it's been used. Oh, you know what? That I'm not sure.
Yeah, I mean that particular work scenario is likely not something that we can work through in a live webinar. We probably would want to either reach out to us on School of Bookkeeping through Quick Answers, and we can maybe work through this, because there's more to it than just importing invoices as an invoices because of e-commerce account.
If you're uploading sales receipts, then you can create a product service item line of sales tax, and then you can point that to your own created liability account. Right. Upload all of the sales receipts, so then you've got one sales tax payable. Even if that sales tax center is turned on, then you're hitting a non-sales tax center sales tax liability account, if that makes sense.
Yeah. But there's more questions than answers with that particular scenario.
Yeah,
so
that's
we definitely
where
don't want to
really
don't hold us to any because Rachel told you so type of thing, because there's more to it, and we probably want to get a little bit more.
And that's why I always need to know what's going on with their business. But if they're a high volume business and that you are bringing in those journal entries, the sales tax is getting calculated in the platform based on the settings that have been set up in that platform, either by you or if they've done it correctly. And so anyway, you bring in your sales and it's going to have for the day, and it's going to have a sales tax collected for the day. And then that'll dump in whatever sales tax liability you've created. Let's say, presumably, you started with a new file with them. You never turned on the sales tax center. You just created Shopify sales tax payable. And it could be many states, but it's all dumping in that one thing. And then all of the sales tax payments clear out that payable. That's how I do it. People have asked me before, do you create different liability accounts for each state? I don't, because I have people with Nexus in 14 states. I don't want 14 lines on my balance sheet. I just do Shopify sales tax payable, and then whatever payment Taxstar or Avalara initiates comes out of that account, or that's where I put it through the bank feed. But,
so that,
yeah.
I mean, this is what bubbles up to the surface when you are talking about, am I bringing in my sales in a summary or a detail, right? Because if you are, the answer to that question is, am I using some functionality inside of QuickBooks after that sale comes in, right? So a journal entry would be fine, but if I'm tracking inventory and if in QuickBooks, and if I'm tracking sales tax, you don't want to use you don't want to
Exactly.
use that,
Yeah.
right? Because
Then
if I'm
the journal
using the
entry,
functionality, well, if I'm using the functionality inside of QuickBooks
yeah,
to prepare my sales tax reports, I am cutting off my nose to spite my face, because a journal entry is not going to flow into those reports. A journal entry is not going to deduct the inventory on hand, because those items are not even referenced. So that is
right.
one
I
of those things
usually
that comes into play.
will run a sales tax liability report in Shopify anyway, or wherever else, not in QuickBooks. But if you do have, you need to hit product service items, then you can't bring in,
Right.
and whether or not
So,
you've created a fee or a sales tax or whatever to a product service or item that you then want to run a report in QuickBooks, that wouldn't be appropriate. But I do have people that, though they have a hybrid situation, so they are using product services and they invoice wholesale out of QuickBooks. So I do have to bring high volume into QuickBooks using the connectors, because I need to hit product service item, because they want to run the report out of QuickBooks. So in that situation, I do have to create a dummy sales tax liability. And I am not using the sales tax center, but also neither is he, because he's selling wholesale. So yeah, it can, oh my gosh, it can get. But there are situations, because if somebody is using product services in QuickBooks for their purposes, usually my clients are invoicing. That's usually the only thing they're doing in there. And then I'm bringing in sales from an e-commerce channel. Then I can't use a journal entry. I have to use the sales receipt, because we need product service items.
all right. So we've talked about this detail versus summary, and there's some caveats to that of functionality that's being used inside of QuickBooks, sales tax consideration, inventory options that we had talked about. Where are they tracking the inventory in general? But then there's this other aspect of, okay, I've got multiple online places that I'm selling, and all of those, as Rachel had talked about, there's a clearing account for each kind of sales channel. But what if I have something like PayPal that could potentially be a payment method on multiple sales channels, right? So that really throws a huge curve, because as you have a sale in Shopify, for example, and they pay with PayPal, and then you have a sale on Amazon and they've paid with PayPal, where does that go, right? Because that sale either came in, if you're having all your sales going through your clearing account, well, Amazon's not going to pay you.
Yeah,
right?
but I've learned the lesson the hard way. I never allow my clients to use one PayPal for multi-channel. They have to use a separate PayPal for each channel, because that's exactly the problem, is then your PayPal payments clearing is never going to clear. And then what if they don't sweep their balance to their checking account? That PayPal payments is never going to clear. So you want to make sure that there's a lot of questions you want to ask if they're using PayPal. Number one, are they using PayPal as a payment method only?
Yeah.
Are they using it for more than one channel? Are they purchasing things with PayPal? Because if they are, then you've got complexity in PayPal. And in that situation, I always connect PayPal to QuickBooks as a bank account, because you have money in, because it's the payment method. Then you've got transfers back and forth to the different checking accounts or whatever PayPal has it connected to. And then you've got presumably expenses that they're making. Hopefully they're not. And then so you've got to deal with that PayPal, capture all that PayPal activity. Now, if they're only using it as a payment method to receive, maybe you could get away without connecting it, but I still always connect it just because of the transfers. I still like to do that. But
yeah,
don't or highly discourage your clients from using one PayPal for several channels. And if you do, you charge them more, because that adds complexity that is it's another level of crazy.
Well, and it's not exclusive to PayPal, right? There's all sorts of other payment methods that people can ultimately use. There's a lot of buy now, pay later, types of things with Sezzle that can be on multiple sales channels. So that's something to consider when you're taking on a client, is do they have these sort of situations? Because it is going, as you're talking about, like the simplistic method is putting everything through a clearing account, and if there is anything that diverts funds from coming through that one payment method or that particular payment source, that's just going to make it far more complex, and then the sales will never match the clearing account, because you're not going to have your end all of be all of zero, which is what your goal is. When you go to
it's so funny because
you actually, I do want to ask you, do you actually reconcile this clearing account, or do you you actually want to get it back down to zero, so you get your reports from the sales channel, and you get your payments that have been deposited, and you'll reconcile that as part of your service? Is that right?
Yeah. I reconcile the payment clearing accounts to zero. I reconcile Stripe to what the balance says. I reconcile PayPal to what the balance says. So some of them are a little funky. They actually will tell you what a balance is at the end of the month. But what I was going to say is, I think it flew out of my head. Oh no, what I was going to say is, can be a little counterintuitive, because the client thinks, oh, I'm just going to hold my balance. It's going to be so much easier for you. And it's actually the opposite, because if you're holding that balance, then you're treating that payment method like a bank account. And then my clearing just sits there. And so I explain to them, you want to set your PayPal or your Stripe or your Square or whatever onto a daily sweep. That way it's coming out every day and my clearing account is moving, because I want that to reconcile to zero at the end of the month, and it's easier for me. So, and I also want, if I've got a match set up through my connector, I want that. I don't want stuff just sitting in their Stripe or their PayPal, and they don't know. So I've had to have the conversations with them before and say, actually, you want to set this on daily sweep, because that makes things it flows better for me. And they're like, oh, I never would have thought that. So it is just very counterintuitive. But they also think that if they connect that one Square account to their BigCommerce, and the Square they're selling in store, and they have it connected to something else, that just adds this complexity. So I always tell them, if they can do it, one payment method per channel, and maybe they have to set up 2 PayPals, maybe 3 PayPals, but I have clients that do that, because having to deal with multiple payouts going into one PayPal clearing, even I can't get it to balance sometimes.
Right. Getting it to that promised land of zero it's like changing tires on a moving vehicle. And one of our viewers there finally threw up the red flags, like, okay, I need help. Right. So best way to get help from us is go to Quick Answers. Now, Rachel, you're actually an elite member of School of Bookkeeping. Can you talk a little bit about the quick answers, your quick answers types of experiences that you've had?
Yeah. So, because we were saying earlier, a lot of my clients, what we're using QuickBooks for is a general ledger where we're dumping in a lot of data coming in from other places. So, a lot of times I'll forget, well, how do I do this one thing in QuickBooks? If sometimes I'll have a one off thing or a special situation and I can't remember exactly how to do it because it's just not part of my regular workflow. I'll just go to quick answers and I'll ask them because I'm like, I totally forgot how to do this. How do I apply this credit memo to this one thing? But my account's already reconciled, so I'm not finding it in the match. And they're experts on that. So I couldn't do it without that.
And if you just want to try it out, we have a day pass, right? We have a one day pass. You get 24-hour access to it to really try it out. Plus, that gives you a $49 coupon to apply towards becoming an elite member. So there's really no risk when it comes to that because it costs $49 for a day pass. You get a $49 coupon to use for the elite membership, which includes a monthly access to Quick Answer. So that kind of puts a bow on, and I think we've created more chaos by the possibilities
Who wants to
that come with.
reconcile PayPal?
But I mean, that does bring up a good point. Like of what you said is like if you do have a more complex client, you should be your fee should be relative or directly proportionate to the amount of complexity that you're going to run into. You don't want to be promising the moon and not even getting the rocket off the ground. So definitely, have your reward versus your potential deep end of the pool be relative to what you're expecting to have. And Rachel, I appreciate you joining us again. We try to keep these under a half hour, and here we are at 53 minutes. So we definitely can.
Yeah, and I feel like we
Uh,
barely scratched the surface. It's like we could talk about this forever. But the one last thing I just wanted to add is this is also how I do it.
yeah,
And I'm not saying this is written in stone or, there's plenty of, QuickBooks specialists that, maybe they have a different way of doing it or maybe they have a different workflow or something like that. There's different ways to achieve what you want. This is, my way. Some people don't like to connect PayPal as a bank. I always do. That's just, I find that I get more accuracy and it's better on my brain when I do it that way. So this is just my method. It isn't the method.
yeah. There's that's one of the pluses and minuses of QuickBooks is there is more than one way to do things, and it doesn't necessarily mean there is only one way to do things because there are certainly several different. I mean, you ask 10 accountants, even who aren't using QuickBooks, how to do things, you'll get potentially 10 different answers of how that needs to work. So we appreciate you joining us again for the workshop. We are going to take a little break on the workshop Wednesday, and we'll probably pick this up in October. So if you're joining us, just bear in mind that we'll return in October when we pick up our workshop. Rachel, again, thank you for joining us on this journey through e-commerce. We really appreciate your insights through this as well.
Yeah, of course.
All right, and we'll see you next time on the Workshop Wednesday. Have a great day.